This is another edition of Frontier Opening Bell. I'm Temple Ashaju. Thank you so much for joining us on the show. With us on the program this morning, we've got Oluwa Odetunde of Greenwich Merchant Bank. Thank you for joining us on the program. And of course, we have Ali Kansachu, founder of Rich Frontiers Management in Nairobi, Kenya. Thank you, gentlemen and lady, for joining us on the show this morning. Let's look at the status of the indexes that we tracked from the way they settled yesterday, as opposed to what we had on Monday when the market was in green. Nigeria opened in red yesterday, down some 0.19% on Tuesday. Ivory Coast went down as well, 0.43% on Tuesday. The Egyptian Stock Exchange, which is looking to list one of the companies, financial companies in that region today, was positive yesterday, 0.06%. Kenya got a bit of a 0.79% decline yesterday as well, while in the Johannesburg Stock Exchange in South Africa, it was a positive of 0.15%. And now looking at the headlines from the eastern part of Africa, AFDB BAS Global Inter Japan Kenya Limited for 36 months on a fraudulent case. Current inflation, high liquidity in the eastern part of Africa. Reports are saying that is good for foreign portfolio investments. 123.8 billion Kenyan shillings in sovereign bonds is expected to be raised in the next 4 months. Another 124.3 billion shillings to fund the budget from the calendar year beginning in July. Standard Chartered Kenya is to give loans backed by customers' investments in funds. Burundi, Tanzania to raise $1.9 billion for rail projects. Seychelles Breweries has 2020 profit before tax around some 25 to 30% lower than the financial reports or the reports given in the calendar year 2019. That's like an expectation, 25 to 30% decline in profit before tax. I'll come to you quickly, Ali, with these headlines from your area. I mean, give us a sense of what this means for the markets.
So I think let me start with the possible issuance of 123.8 billion of sovereign bonds by Kenya. This is following on or synchronized with the announcement that the IMF have come up with a 38-month project proposal of support. And I think that IMF announcement is an important signaling effect. And the Treasury is taking that as an opportunity to also come to the capital markets with interest rates so low. In absolute terms, spreads remain wide, but the absolute rate of interest remains low. It is an attractive time for issuers who are able to tap the markets. And I think that's what Kenya is going to do. They're counting on the IMF support, they're counting on the World Bank support, and that's going to give them confidence around going to the capital markets. We've seen Egypt, we've seen Ivory Coast, and I think 1.2, that amount, which is about $1.2 billion, is small enough for the market to absorb. So I think that's the context with which we should look at that. It's reasonably positive. It means that the challenge which Kenya is facing, which is the debt profile, gets kicked down the can gets kicked down the road till about 2024. Burundi and Tanzania to raise $1.9 billion for a rail project. This is around the railway that is intended to end in Dar es Salaam. It'll be interesting to see international appetite for such a project. Obviously, Kenya's had serious challenges, and the intention in Kenya was really to dominate the railway space for the region. But Tanzania, under President Magufuli, who of course was Minister for Infrastructure, have come in as a competitor and offering optionality to some of the regional countries, of which Burundi is one. Seychelles breweries, look, economy is very dependent on tourism. Tourism, of course, slumped, and therefore that translated into a sharp slide in beer consumption, and that's why you're seeing pressure on the earnings of Seychelles breweries. Seychelles, of course, has had the most aggressive vaccination campaign of any African country. Of course, the population is much smaller there. It's about 120,000. But it will be interesting to watch Seychelles as an experiment as to how effective the vaccination program is. For now, Seychelles has quite high levels of infections and is around 90% of its maximum that we've seen since the pandemic hit.
Right. Thank you very much, Ali. But if I could just piggyback to the story on the capital raising by the Kenyan government. I mean, the concern of a lot of Africans, whenever you talk about debt profile, is always that it is rising, and debt servicing is always a major concern to them. And we know that in Kenya, the GDP, the debt to GDP ratio, I think at this point is 60%. Should that be a source of concern for people or not?
So Kenya's debt to GDP is around 68 to 69% now, and the IMF and World Bank have been pressurizing Kenya to also include state-owned enterprise liabilities into that mix, which would take us over 100%. So excluding that calculation, we're at 68, 69%. The key challenge, Temple, really is debt service, revenue to debt service ratio. You know, how much of our revenue is going towards servicing our debt? And really, we had gone over 50%, which is, at one point, we were at 61 shillings for every 100 shillings raised was going towards debt service. That's clearly untenable. With the application to the DSSI, this obviously is now a little bit better. But I think, you know, if I'm looking across the continent, I'm looking at debt to GDP, but I'm also looking at that revenue debt service ratio, because that clearly tells us how much pressure a government is under. In Nigeria, for example, I believe it's very high at the moment.
Thank you very much, Ali. Let's now move on to the Western African space, where we've got the Debt Management Office in Nigeria raising concerns around liquidity, inflation at this point as key. As the markets sees all of these as key concerns for yields at this point. Nigeria, then inflation tops some 16.47%. We had a bit of conversation around this yesterday. Food now hits some 20.57% in terms of food inflation. Core inflation is 11.85%. Tomorrow, 18th of February, 2021, we expect the fourth quarter and full year 2020 GDP data to be released by the Bureau of Statistics there. And of course, the National Insurance Commission now approves new board for listed Law Union and Rock Insurance. That's a company listed in the Nigerian Stock Exchange. In Ghana, the government there is in the process to take over Airtel Tigo, confirmed by the minister in charge of communication and digitalization. Bosun now joins us. Bosun is the executive editor at Frontier Africa Reports. Thank you, Bosun. Oh, okay. Hopefully he gets back. Looks like he's having some connection challenge at this point. Let me come to you, Orolua, with some of these headlines and make your pick and give us a sense of how you are digesting that at Greenwich Merchant Bank.
Well, very interesting stories. Inflation came out yesterday, wasn't anything we didn't expect, obviously, due to the persistent structural issues we had. But we did see, that food core inflation was more or less the major driver, but just because of the weighting that the food index has on the index, that was what still led to that main assumption that food inflation was still the driver, because there was actually a deceleration if you actually look at the numbers in food inflation. So it was about 2%, and it declined to about 1.83% So, but the core index still suffers, core basket still suffers from a lot of FX difficulties that we're currently having in the situation where the parallel market is currently going at about 500, and then in the FX window is looking at about 400 plus. So it was interesting, and we also understand that the the base effect from the year before also was a major contributor to that uptick we saw in inflation. We still expect it to retain its upward position. We projected the figure of about 17.24 by next month, so we're expecting inflation to hit that. On the GDP story, we're expecting tomorrow. We expect that the country will still remain in contractionary territory. We're expecting that by 2021, we should see the economy coming out of the recession, which we would probably be recording positive growth. So we are looking at maybe the second to third quarter of 2021. We're expecting that there will be the low base effects from last year, marginal effects, marginal positive growth from the ICT sector and the agricultural sector due to a lot of the programs, Anchor Borrowers programs, the tax programs that the government has and the central bank has made priority during this period will support growth in the agricultural space. But we do expect that the manufacturing and trade sector might not see that level of growth. It will be possible. We're expecting maybe by Q3. We're expecting that the FX liquidity challenges, supply chains, continuous supply chain disruptions will still make these sectors largely affected. So by 2021, we projected that growth should reach a stage of about 1.1%.
Okay, thank you so very much for all of these analyses. But would you want to speak to the DMO's concern around liquidity and, of course, inflation? I know you just explained your inflation concerns at Greenwich Capital, at this Greenwich Merchant Bank, I beg your pardon, at this point. But from the regulatory perspective, I mean, how do you see the concerns that they are bringing out at this point?
Sorry. Well, it's clear that inflationary pressures will still remain persistent in the Nigerian economy, except we do see, some structural changes, and in that space. So yes, it is a top concern, especially given the fact that this year the government is looking to significantly increase its debt to GDP ratio to about 40%. The new medium-term framework where we discussed some of all of these things, and to pick up from what Ali earlier said about debt servicing, and that's a major issue for the Nigerian economy. Also, last year we saw that was about 99% more or less. So, and we are currently facing liquidity challenges. I mean, in terms of revenue. So, if you're going to be looking at it from the debt to service ratio, we are in serious trouble. But the debt to GDP ratio is still more or less contained in some way compared to our Nigerian peers. According to the World Bank and IMF threshold that looks at about 56%, 40% is still somewhat decent. But you'd also now want to look at the fact that, if the government is definitely looking to borrow more from the domestic economy, but it also did mention it could still extend ways and still borrow from foreign sources. But I mean, foreign sources would largely be dependent on oil prices, the trajectory of oil prices in 2021, and also what our current account balance looks like. Are we going to be getting aid, some transfers, remittances flows, and things like that? We know that currently, yes, things look to be going up for global economy. For the global economy, stimulus packages and all of those things, some way invariably affect remittances flows. So so many concerns about that issue. And you also want to look at the fact that inflation also, for the Nigerian economy, you see that if the government is currently looking to issue instruments, particularly to the domestic economy, probably at lower rates that is currently doing, the value of your real rate of returns, the value of the actual coupon that you're going to be getting will be lower, because when inflation is on the upward trend, that returns you are getting is actually not consistent, being that it's also a fixed rate bond they might be looking towards. So I mean, for the bondholder it is not a positive, but for the bond issuer, inflation at very high rates is actually positive.
Thank you very much, Oreoluwa. Let's now move on to the Southern African space and look at the stories, and that's a region. The South African airline, the administrators there got some fresh 5 billion rands severance package for ex-workers. And of course, Spar Group sales was 9.8% higher. SA Liquor sales also shrunk by some 17.9%. Pan-African gold, we understand output is now some 5.9% higher, sales jumping some 8.6%. And Vivo Energy, Moody's affirms Baa3, and of course outlook now very negative. Glencore's revenues shrunk by 34%, 142.34 billion dollars there. Boston, let me quickly come to you with these developments in that area. I know that's of interest to you will be the South African story there, the South African airline stories.
Yes, thank you. The South African Airways story has been quite pathetic, but this is a lifeline. 5 billion rand at least to get the ex-workers to move on with their lives of the airline severance package. Try to make the airline a little bit more nimble. A whole lot of conversations going on between the new managers or owners of managers of the airline to make it a whole lot bit more fit for purpose with the whole pandemic and the impact on tourism, aviation, travel industry, globally speaking. So this is at least finding some money to let the ex-workers have some nice time of take care of themselves moving forward. Then you can now deal with the other issues relating to the debt that South African Airways have. Where will the new investors bring in money? How soon will they be able to get the airline back in the skies? Is the airline business still very profitable? Where are the routes, for example, for them to fly? Where Kenya Airways, for example, is trying to repackage its aircraft to more into cargo rather than passengers, which is going the way of Ethiopian Airlines, for example, and others around the Middle East. So this will have to be a whole lot of considerations in trying to get South African Airways back to life and back to the skies, and some measure of lifeline before it becomes more profitable all over again.
Right. Thank you very much. Ali, your thoughts on this? Did this signal some kind of a recovery for the airline company, and any other headlines that you may want to pick there?
So I think in the case of South African Airlines, because of the dependency of South Africa on tourism, this is the #1 or #2 destination in Africa. It is very difficult to have a thriving tourism industry without a functioning airline. So I think in South Africa's case, it's a decision that's been driven by the national interest. And unfortunately, the question remains, and Tito Mboweni keeps talking about it. I think it's all about corporate governance and whether they can really fix the situation. Otherwise, we're going to be in this endless Groundhog Day of bailouts every single year, and therefore, that's the issue. I would be urging them now to find a partner who can come in and make the difficult decisions that a local management probably finds it difficult to make. Moving over, interesting, the liquor sales minus 17.9%, Spar Group. It's interesting, if you look at that liquor restriction we had in South Africa, it reduced massively the load on the healthcare system in South Africa. And if you dissect the last 12 months, you'll see that whenever the liquor restriction came in, the pressure was lifted off the healthcare system. And the question is, is the government now going to make it more difficult for liquor sales? And how does that impact people like the brewers who've been complaining quite vociferously of late about, and actually many of them have made some cutbacks.
Thank you very much, Ali. Onyeka Ejoma from Vetiva Capital Management joined us in the course of the show. Thank you for making it through on the program this morning. We'll eventually take it back to some of the Western African headline there, because we know very critical for Nigeria tomorrow is the release of the GDP data for Q4 and full year 2020. And that's something that I'd like to hear your thoughts on. But before we do that, let me quickly move on to the Northern African headlines that we have here, where the stock exchange there is looking to list Orascom Financial Holdings shares this morning. I guess that probably would have been done at this point. And of course, Sudan's inflation rising to 304% for January 2020, and as opposed to 269% in December. Tunisia Stock Exchange is also to admit 800,000 new shares of Sotomel, the building materials manufacturing company there. Let me quickly come back to you, Ali, with these headlines in the Northern African space. I mean, what do they really mean? How do you see investors trading them today?
So let me start off with this inflation print from Sudan, 304%, I think second only to Zimbabwe. And obviously there have been some unrest in some areas of Sudan because of this increase in staple goods. For me, the revolution that we witnessed in Sudan was really an optimistic and forward-facing one. I was very, very positive. I think at the back end of the Trump administration, we saw some support out of the United States to assist Sudan. And really, we're now in this very volatile period where they really need as much support as they can get in order to rebalance the economy. I see Saudi Arabia is proposing some mega projects, but right now, I think the key thing is delivering cost of living improvements for its citizens. And it's really important, if that revolution is going to survive or fall into increased volatility and uncertainty. Orascom, this is Naguib Sawiris, always fine-tuning his companies, but what it speaks to is liquidity in the Egyptian capital markets. And many of us across the continent would like to see this type of liquidity in our capital markets in order to encourage these divestments, increase ownership amongst our citizens. And I think it's really important that we start focusing in on that. I know in Nairobi, they're trying to do a lot on that front, but at the end of the day, it's about bringing value propositions to the market where citizens can get behind it.
Onyeka, is there a lesson to learn from what Egypt is doing with its markets there? I mean, we've been seeing some entry and exit of a lot of corporates lately.
I would say that, I mean, over the past, thanks for the question. I would say that over the past, couple of years, we've seen this sort of adjustments of market players in across a lot of African markets, and this is largely because a lot of these exchanges are still relatively young when you compare them to their counterparts in other advanced economies. And we're basically seeing that some of the earlier players in the equity market are choosing to become more private, while some private companies are choosing to become public. And this is all because, and we'll continue to see that for a while, largely as people tend to, as different companies tend to understand the benefits and the risks of, of listing in the stock market due to different precedents and due to different precedents set by, companies that have listed and exited, or companies that are just choosing to list. We're going to continue seeing that for a while in the across African stock markets.
Okay, thank you. Great view. Yeah, would you want to give us your outlook on the GDP data that will be released tomorrow by the NBS?
Yes, please? Yes. So I think we're generally expecting a negative contraction of around 2 to 3%, somewhere in between 2 and 3% in Q4 20, and largely Q4 20. Even though we had seen, as at that time there was, relaxed social distancing measures, we had started to see economic activity pick up. Transport activity was on the rise. Logistics activity was also on the rise. There were still a couple of, hitches across the economy. We saw the spate of protests in Q4 that broke out in Q4, took on a different turn in December. We saw some different actors which may or may not have been connected to the protests turn a little destructive and violent, and and also the disruptive factor of logistics during that period has definitely affected the movement of inputs and outputs of different sectors. Add that to the continued pressure on the currency during the period, especially the heightened pressure on the currency during the December period, and we're largely expecting another week with this another contraction in Q4 2020. Going forward, like Ore said, the factors are still largely against Nigeria in terms of not much fundamentally has changed, and we are probably not going to see a positive movement until Q2, Q3 2020, Q2, Q3 2021, likely supported by the low basis in 2020.
All right, thank you very much. Bosun, let's have your final thoughts on these headlines. I mean, yesterday I recall you had a chat with the DG of the DMO, Patience Oniha, and if you would like to square her comments up with the inflation data and, of course, the GDP numbers to be released tomorrow.
I think the interview. I think the interview just about the new debt management strategy for Nigeria, the FX liquidity concerns, the need to issue more local currency bonds at the long end of the curve. That's where the regulators are trying to push everyone right now in order to be able to borrow longer for yields that are not at a runaway level or pricing, as it were. That's the whole idea under the new dispensation. It doesn't look like Nigeria will be able to go to the international market anytime soon, from all indications. So the debt strategy is to look inward and see how much can be borrowed locally, considering the level of liquidity in Naira terms that we have locally, and the cost of Nigeria borrowing in dollars at this point, even though there is so much liquidity at the global FX market, but a whole lot of fiscal issues to deal with that will make it almost impossible right now. The uncertainty around the price of oil, now at about $64 a barrel. Nobody knows tomorrow what happens. It could go back to 20, 30, we'll go back to 40, which is around our budget benchmark. So it doesn't look like the authorities are banking on the current oil price rally to run to the global market for any borrowings for now. So they're just trying to play it as it comes.
Thank you very much for all of this analysis. Bosun Omofaye, Executive Editor at Frontier Africa Reports. Thanks a great deal. Onyeka Ijoma, appreciate your thoughts on the show as well. Onyeka Ijoma, Consumer Goods Analyst from Vetiver Capital Management. Thank you so much. Oreoluwa Odetunde from Greenwich Merchant Bank. Appreciate your analysis. And of course, Ali Kansachu, founder of Reach Frontiers Management in Nairobi, Kenya. Thanks a great deal for making it to the program this morning. I appreciate all of your perspectives. Thank you. This has been Frontier Opening Bell. I'm Temple Ashaji. I'll see you next time. Bye for now.